Hi everyone, welcome to our first FTX live stream. We have Sam with us, CEO of FTX and Alameda Research. Would you like to introduce yourself?
Yeah, hey, I'm Sam. I started up Alameda Research about 2 years ago and FTX about 3 months ago. Alameda Research is a quantitative cryptocurrency trading firm. We trade something like $1 billion a day globally, and FTX is a newly launched crypto derivatives exchange. Happy to answer all of your guys' questions.
Okay, so we're just waiting for people to join this live stream. First question. This is from Charlie XBT from Twitter. He would like to know more about the journey of Alameda and how it all started.
Yeah, so I left Jane Street about 2 years ago. I was doing ETF trading there, and I don't know, took sort of a brief look into crypto and saw what looked like sort of a lot of good trading opportunities, but I had no clue if they were real or if it was just sort of fake data. So I started looking into this. Upon further inspection, it looked like a lot of it was fake, but some of it was real, and enough of it was real that there were some some really good trading opportunities. Mostly because there's a ton of customer demand for cryptocurrency and just not enough liquidity being provided. So called up a few college friends, and we started up Alameda.
Okay, so next question we have from Herd Eugen from Telegram. Do you plan on offering access for level 2 order book?
So I think that we're. So I think that just checking with our devs over there, I believe this already exists, and maybe I'll have one of them post in our Telegram channel right now what API call you can use to get this. So you can go over to FTX_official on Telegram right now to check that out.
Cool. Next question, does it not bother you about being unable to submit orders when BitMEX is overloaded, or do you have a golden API key?
It definitely bothers me. And I think it bothers everyone who uses them. One thing I will say is, I don't think that they really hand out golden API keys. Say what we will about them, but I think BitMEX is generally pretty non-discriminatory. Their matching engine works just about the same for everyone. And that was obviously one of the impetuses of FTX, is that we saw an opportunity to sort of build a new derivatives exchange from the ground up and sort of avoid a lot of the pitfalls that the existing ones have run into.
Next question is from Benson Sun. How much trading volume are we targeting at the end of the year?
Yeah, so obviously the answer is infinity. Like there's the more the better, and I think I want to make it very explicit that there isn't a level of trading volume after which we'll be like, yay, we did it, we're going to stop trying. Like, we always want to keep growing the FTX ecosystem, and we're going to keep pushing it farther and farther and farther. But if I had to give a number, I would say that internally, the sort of over under that we're targeting here is about $1 billion a day of volume. And if we got there, then that would put us in sort of the first tier of crypto derivatives exchanges in terms of volume.
Next question is from Twitter, from Larry Cermak. What were other futures exchanges not providing that motivated you to start your own exchange?
So there's a ton of things here, and just to go through sort of some of the top ones, but we have whole white papers on this. But some of the biggest ones here, index futures were an obvious one. I mean, most of finance runs off of index futures, not single stock futures. But in crypto, there were none. So we now have altcoin, midcap, and shitcoin index futures. So you can easily get levered long or short the entire industry. We have futures on some coins that were really missing liquidity, including Tether, BNB, Leo. And we have one centralized margin wallet that powers all of your trading. So you don't need to separately move your BSV into your BSV wallet and your XRP into your XRP wallet, and your ETH into your ETH wallet to be able to trade futures. And the last thing that I'll say is a completely redesigned risk management system to try to avoid clawbacks before they become necessary.
What advice would you give to someone seeking a job in quant trading?
Yeah, so it's super tough. It's not an easy field to get into, and even more than that, it's a really frustrating field to try and teach yourself. because there's really not much good public information available. And the big reason for this is just IP sensitivity. If, firms made all of this available publicly, then, all of their edge would go away, or at least some of it would. So because of that, you're not going to learn it really in a classroom. You're not going to learn it from a textbook. You're not really going to learn it online. You sort of have to learn it from doing it, even more so from people who know what they're doing. And so I think what I'd say is, rather than trying to become specifically really good at finance, I would say, just try and build up your quantitative skills, your critical thinking skills, your quick thinking skills, your technology skills, because those are sort of, the key underlying components of a lot of the quant sector.
Another question from Twitter, from Patrick Dugan. What do you think the path of fees will be in the coming years, both for FTX and the industry at large?
So in general, I expect fees to come down in crypto, and I particularly expect that from the highest fee exchanges. And so, you look at a lot of the U.S. exchanges right now have very large fees. You look at a lot of the spot exchanges have large fees, and so I expect that sort of those will all come down. I think any site that's charging more than 10 bips of fees right now, I expect a lot of those to be coming into 10 bips or less. So that's one change. And then the other thing which I expect is for take fees particularly to go down. This is sort of one intentional choice we made with FTX, is if you compare our fee structure to BitMEX, our take fees are lower and our make fees are higher. And the reason for this is that you get these sort of unfortunate situations when you have really high take fees combined with maker rebates, where two people want to trade with each other, but neither wants to be the taker because they'd have to pay like an extra 8 bips of fees. And so they're just sitting at each other, staring at each other across this order book. And it's tick wide, it can't get any tighter, but neither person's going to cross the spread, even if they really do have cross fares and want to trade, because neither wants to be the one to pay the take fees. And so because of that, as crypto gets more liquid and more efficient, and people are able to more accurately price these coins, it's going to be pretty important that take fees come down to sort of be in line with that.
Will we be offering Bitcoin dominance futures in future?
It's high up on our list of products. So I think we have 1 or 2 things that we're planning to roll out before that, and then after that, I think it's in the next group of futures that we're looking at, along with hash rate futures and a few sort of more creative ideas in the crypto space. So stay tuned for that. But I would say ETA roughly 1 month for that round of futures to start hitting.
Question from Federico from Twitter. How do we manage conflict of interest in having our own exchange and also running a prop shop?
Yeah, so I think the biggest thing that I would say is, like, right now, Alameda is just a huge win for FTX. It allows, it's allowed FTX to be, have the most liquid order books in crypto from before the day it launched. And I think that just makes it a great experience for customers. And if you kind of put yourself in Alameda's shoes, like, their incentive by far is just to make this exchange as successful as possible, to make it as liquid and deep as possible, and to give customers as good of an experience as possible. Because in the long run, that's what's going to determine the success of the product, and that's really the dominant factor.
Larry asked from Telegram, can we get options trading on FTX? You guys are one of the few makers who can provide enough liquidity to make it fun.
Yeah, that's another thing which is on our roadmap. I think that's, somewhere in the 2-month range. We'll keep you guys updated. We have sort of a blueprint of how we want to do this, but we haven't worked out all of the details. And in particular, we're super interested to get feedback from the community on things like which strikes you guys want. One interesting question is, like, is most of what everyone wants to trade basically just sort of standard at the money calls to bet on volatility? Or is there a lot of demand for, like, specifically, 50% downside puts in order to hedge a specific type of exposure? Other things obviously want to recruit as many liquidity providers as possible for the options. And, we want to hear what coins people have the most demand for. And, those are sort of the details that we're going to be working out over the next few months as we look to bring them live.
Benson wants to know, how is FTX going to compete with BitMEX?
So I think that, there are a bunch of answers to that. And I think it's less like, here's the one, golden reason, and more like a very wide array of reasons. So, one thing, it has a really wide array of products. So, BitMEX has super liquid Bitcoin perpetuals and, relatively liquid Ethereum perpetuals. So they're a little bit weird, and not much else in terms of liquidity. FTX has super liquid futures across 10 different coins, 3 different index futures, and, we're rolling out a new one every week. So that's the first thing I would say is just, FTX has a way wider array of products. The margin system is cleaner because it's USD based settlement. That means that you don't have to have inverted futures. The matching engine has not had any latency issues even during busy periods. Take fees are substantially lower than on BitMEX, especially for higher volume traders. And we also have leveraged tokens, which allow users to put on margin positions without needing to manage collateral or worry about liquidations.
Where do you see Alameda and FTX in 3 years?
Yeah, so obviously there's a wide array of outcomes here, but I would say what we're targeting here is for FTX to become the dominant cryptocurrency derivatives exchange. For it to become the cleanest, the most professional, the most creative, to have the most, make it have the most solutions for customers, and the products that people really want to trade built the way people want them, and for it to become sort of the industry standard for derivatives. And for Alameda, I think it's a similar thing, but on the quantitative trading side. Obviously, that's going to be a lot lower profile. It's not really a customer-facing business nearly as much, but for it to become sort of the de facto liquidity provider in crypto.
Okay, and this question is actually coming from me. FTX is making the markets very liquid, and it seems like we're trying to make the markets more efficient. Why are efficient markets good for the crypto ecosystem in general?
So I think in general, liquidity enables a whole lot of things. One thing is you look at institutional players. You look at Goldman Sachs, J.P. Morgan. Thinking about providing some sort of crypto-based structured product for their funds for customers, and they want to be able to say, hey, we want to buy $5 million of bitcoins, and we want it to be smooth and efficient, and we don't want to lose 50%. We don't want to massively disrupt markets, and we don't want to have to build sophisticated routing algorithms for this. We just want the liquidity to be there for us, and that makes our job providing these products for customers way easier. And so when you talk about sort of large institutional money coming in, having enough liquidity to support it is key. This also just simplifies the process for everyone. You no longer need to create 50 accounts on 50 different exchanges so that you can grab the liquidity wherever you can find it. Instead, you can just pick your favorite place, the place that has the liquidity, and find it all there. And the last thing that I'll say is when you look at products built on top of crypto, you look at payment systems, cross-border systems. These are the sorts of things that rely on the speed and efficiency of crypto. But if they're losing 3% to spreads and fees every time they try and do a transaction, that kills the product. The whole point was that you can, beat out credit card fees and things like that. And so, having the liquidity to support institutional grade products built on crypto is key as well.
Okay, this is from Mike Van Rossum on Twitter. Besides lacking infrastructure, what do you see as the main differences between crypto HFT and traditional HFT?
Yeah, so one thing that I would sort of point to is the first letter there, the H. So, high frequency trading in traditional markets, you're talking about sort of sub-millisecond things. You're talking about nanoseconds, you're talking about a lot of market microstructure, and you're talking about really, really refined systems. But when it comes to crypto, half the matching engines in crypto lag by, a third of a second. And so if a matching engine is only spitting out trades, 3 times a second, then it's not exactly going to be the same race of nanoseconds all across the board. And instead, sort of HFT bleeds into this, slightly less high frequency trading, where you have to understand how to trade in a messy environment where all the data you're getting might be lagging by way, way, way more than your trading systems do. And, your trading system lag almost becomes irrelevant compared to, understanding what it means to get this maybe stale piece of data from some exchange somewhere. So I think that's maybe the biggest difference in terms of HFT. One more thing I'll note is fees. Traditional finance exchange fees are quite small to the point where they're obviously an important part of it, but they're never more than a tick, for instance. In crypto, there are usually many ticks. And so that sort of adds another twist where, it might be that like you lift an offer and then the market goes up 3 ticks and you still lost money because you paid 6 ticks worth of fees. And so that's sort of another interesting twist that crypto throws into, HFT.
Question from Liar. What made you want to pull your hair out so far, building FTX or as a trader / arbor?
So I will first say that it is actually true that some of my hair height does depend on me pulling it out. I'll go like this a fair bit, and it'll pop up a little bit. What are sort of the most frustrating things that we face? A lot of the things that just seem like, boy, this is really making the space clunkier. Things like withdrawals not being processed. Whenever we say, oh, withdrawals will be processed in 16 hours, and you can only get 100 out a day, and it's this massively complicated process to do so, that's kind of a big turnoff for us. Things like, well, actually, you can't withdraw this coin at all. Actually, it's going to be a year before we implement that wallet. That's pretty frustrating. On the exchange side, you see things maybe as like an exchange operator. One thing obviously is if you look at our Telegram chat right now, you'll see an endless stream of people asking for their KYC to be prioritized over the rest of the endless stream of people. I totally get it. We've done this too on the Alameda side. No hard feelings. But from our perspective, it's definitely because we want to be able to tell anyone like, don't worry, we'll definitely get tiers immediately, but we can't tell that to everyone. And one of the more frustrating aspects of this is that some of the people doing this are, let's just say, not exactly playing by the rules. And this is the 30th time we've turned down their KYC for BIC, and then hearing from those same users frustration about why we haven't accepted their hordes of obviously false KYC info.
Any plans on launching futures tracking FTT?
We've thought about this a lot internally. We're certainly not going to be launching them, on Monday with the rest of FTT. I think the market's not at a place where it can support futures yet, given that it doesn't exist yet. But we're going to keep monitoring it as things go forward, and keep monitoring, if and when it's time to be able to do that. And obviously there are a lot of market forces that we're going to be taking into account when doing that. So I think it's a somewhat complicated decision, and we're going to be playing that one by ear.
Another question from Telegram. Do you have any fears of regulation, third-party risk, especially when you have people spoofing bid-ask walls of up to 50 million contracts on BitMEX, and them not being able to act upon it?
Yeah. So spoofing is an interesting case. I think they divide sort of fraud into 2 different types in crypto. The first is the ones where your money is just stolen, and that's just really fucking bad for this space. Like any time that there's a hack, that there's a theft, anything like that, that's just really bad. And I think similarly when there are massive clawbacks, that's really bad because that's basically users just losing money. The second category is what I'd say, things that would in traditional equity markets be deemed market manipulation. And so you look at things like spoofing. And I think that's an interesting case because, by and large, I think it's important what equilibrium the market sort of adapts to. And so, the worst thing that you can have is a strong market expectation that orders are legitimate, and then to see a spoofer come in. Because people see that offer and they assume that that liquidity is there, that that's a bona fide order they can trade against. And then it goes away before anyone can trade against it every time, and it's sort of wrecking people's understanding of how these markets work and the implicit promise of them. And so I think what I'd say there is that, one, I think that, these things are bad for this space. And 2, I think that it's important that this be really clearly communicated and that, everyone be on the same page about what the rules even are. Because right now we're in the worst of all worlds where, given this sort of, multinational nature of crypto and the fact that lots of regulatory agencies are still trying to figure out how to regulate this space, there's really a lot of uncertainty over what the norms are on these exchanges, and that causes a lot of damage.
Wow Win from Twitter wants to know, are you guys planning on going beyond the Bart pattern and into drawing more complex characters like Marge and Maggie?
Those are actually extremely IP sensitive, but we'll tell you if and when we release them.
Any plans to make FTX available to U.S. citizens?
We would love to. I'm not sure the CFTC would love us to. So I think I would ask the CFTC about that. No, but sort of more seriously, we're actively monitoring that. We're like everyone else. We're waiting for the CFTC to create a regulatory framework for derivatives in crypto, which it more or less hasn't done yet. If and when that happens, we will do what we can to fit within that and to service U.S. customers. But right now, this really is just waiting on the CFTC to provide guidance.
Okay, so in one of our podcasts, we mentioned that Alameda Research is a market-neutral trading firm. What exactly does that mean?
Yeah, so what that means basically is that we're hedged. And, another way of saying this is that if markets go up or down, we don't particularly win or lose that. We're not just buying a lot of crypto and sitting there hoping that markets go up, or shorting a lot of crypto, sitting there hoping that, they go down. Primarily, we're doing sort of arbitrage and short timescale quant strategies that leave us, roughly delta hedged as a firm. It's not always 100% perfect hedge, but we keep our net positions quite small. And so, by and large, the vast majority of our balance sheet does have a hedge on somewhere. And what that means basically is any time that, we buy a Bitcoin on one exchange, we're going to be selling some Bitcoin exposure somewhere else to make sure that we sort of maintain that delta neutrality.
What do you think of other traditional discount brokers entering the crypto market like TD and TradeStation?
Yeah, so as far as I can tell, they're all taking this pretty slowly. Anytime any employee of one of them says the word Bitcoin, CoinDesk publishes 10 articles about how institutions are jumping into crypto now. And, somehow all these institutions have jumped in 10 times in the last year, and none of them are trading yet, which is a little weird. So I think what I'd say is, take this all with a grain of salt. They're not really in yet. They're just testing the waters. But they might jump in. And, even when they do plug into crypto and do so in size, that could be revolutionary. I do want to caution with one thing, though, which is people thought that, the CME futures might be revolutionary. People thought now all of a sudden Merrill Lynch can trade Bitcoin products on an exchange they already have access to. This is going to bring all the institutional flow in. And it didn't. I mean, CME trades 10% as much as BitMEX does. So that was, that didn't have that much of an impact on the crypto ecosystem. And so the other thing I'd say is just apply a bit of skepticism here. Don't sort of count your chickens before they hatch. And, obviously it would be great for the space if and when these institutions really do dive in. But so far we haven't really seen them committing.
Do you think the hourly interest rate change on FTX would make the price more volatile?
I don't think so. So I think it actually has the opposite effect, where when you have, the context here is that BitMEX and Deribit and a lot of other, not Deribit, BitMEX and I think Bybit and a lot of other venues have 8-hour interest blocks. So for their perpetual futures. So they kind of accumulate the premium over an 8-hour period and then pay it out all in one chunk. We do that hourly instead of every 8 hours. And you get these weird edge effects when you do over a long period of time, like 8 hours, because all of a sudden there's about to be 15 basis points of funding paid all at once, and that sort of distorts markets. Whereas if you're sort of more continuously doing it, then it's a more continuous check to keep the futures in line with the underlying index.
Okay, so we're going to wrap up this Twitter live stream soon. Maybe do you have any general words to our community and, our appreciation for all the support that has been shown?
Yeah, so, I think the first thing to say, as you said, obviously we're super fucking grateful for everyone who has given FTX a chance. Coming from Alameda is not at all a customer-facing business, and obviously we want people to like us, but we don't really give a, it just doesn't matter that much. And FTX is totally different. We could build the best product in the world, and if no one uses it, then it's not worth anything. And so, we're proud of the product we've built, and we're proud of all the progress that we're making on this. But it really is nothing without all of you guys. And kind of pursuant to that, we really like hearing your feedback. We really like hearing what features you guys want. Don't feel like you're going to hurt our feelings by asking for trailing stops. You'll be the 50th person. We're used to it. And all these things make it to our stack. Some of these features that we roll out are things that we think the market needs, but some of these are things that the market's told us it needs. And so, we love your feedback. And, we just want you to give FTX a chance, try it out, tell us what could make it better. And, if there are products that you like there, we would love for you to make it your sort of destination for trading in cryptocurrencies. I'll maybe mention a few last, sort of announcements here. One, obviously, FTT, the ecosystem token for FTX, is listing in a couple days. So it's listing about 48 hours from now on Monday, July 29th at 10 p.m. Hong Kong, 10 a.m. Eastern Time, 2 p.m. UTC. It will be launching on FTX and 2 other exchanges as well. We'll be revealing those names over the next couple days. And we would really love to have you guys trading that market from the very beginning. We're really excited about this token. We've put a lot of work into it, and there's going to be a lot of a lot more cool shit coming out in the future. We also have a new, completely redesigned FTT transparency page up. This looks much more professional than the Zendesk article. You can see it here. So if you go to ftx.com/FTT, you can find it, and it has information about our total supply, circulating supply, our upcoming burns. We've got about 500,000 tokens that we're going to be buying back and burning pretty soon, and it has information about how you can buy FTT. So we'd love for you to check that out. And if you want to hear more, obviously you can follow me on Twitter. You can follow FTX on Twitter. You can join our Telegram group, which is FTX Official. You can join our WeChat group, which is our Chinese language community. It's at FT Exchange. That's FTEXCHANGE on WeChat. And you can message a admin there to get in. And you can find more contact info online at ftx.com.
Thank you. That's good.
Cool. Thanks, guys.